I'm Sarah, a tutor at Accountancy Learning, and in this video I'll take you through the AAT Level 3 Financial Accounts Sample Paper 2 Task 1. So this task is all about using daybooks and accounting for and monitoring non-current assets. In the first part of the question, we're given some statements and we need to identify whether they are true or false. An advantage of using a book of prime entry in a manual system is that all errors will be eliminated. So can we really ever eliminate all errors? Well, it's not really possible. So it doesn't matter what type of system you're using, there can still be the risk of error. So that one is false. An advantage of using a book of prime entry in a manual system is that transactions are summarised prior to being entered into the general ledger. So here they're summarised. So this is true. When you have your sales daybook, for example, you will have a net column, a VAT column and a total column. And then once you have closed the daybook for that particular period, the net column would go off to your sales account, your VAT column would go off to your VAT control account, and your total column would go off to your receivables ledger control account. But those totals, so you wouldn't have to put each individual transaction into the general ledger. One purpose of the non-current asset register is to assist in physical verification of assets. So again, this one is true. So what we have on our register, can we actually prove that we've got them physically in our offices, our factories, our warehouses? It is important for the part of the business wishing to purchase high value non-current assets to obtain authorisation. Identify which of the following is not a reason for this. So it's about obtaining authorisation to purchase high value non-current assets. So managers can ensure that funding is in place for the expenditure. So if we obtain authorisation, then managers can make sure that they do have that in their budget. Managers can ensure that the spending fits in with the long-term plans of the business. So again, if we go and get authorisation for that, then it means that they can check the strategy. Is this going to be a worthwhile purchase of a non-current asset? And to comply with accounting regulations. So this would be the answer, because there's no regulations that would require this specifically, because the authorisation elements will come in and be set internally based on management and operational requirements. Complete the following statement regarding the depreciation of non-current assets. The depreciable amount of an asset is the cost of, and then we need to choose the asset less accumulated depreciation, or the asset less residual value. So the depreciable amount of an asset, so it is the cost of the asset, but we do have to take something else into consideration before we just apply depreciation on the asset cost. So it's not going to be the first one. The second one, the asset less accumulated depreciation. So this is after the depreciation has taken place. So this is known as the carrying amount. So the asset less residual value is what our depreciable amount is. So if there's any expectation of depreciable value, of residual value, then we need to take that off the cost of the asset, and that's the value we then put our depreciation on. Nancy Jones is a sole trader. She keeps a non-current asset register which is separate from the ledgers. VAT can be ignored. You're working on her accounts for the year ending the 31st of March 20x8, and Nancy has the following policies in place. So relevant expenditure over £150 is to be capitalised. A full year's depreciation is to be charged in the year of acquisition, but no depreciation is charged in the year of disposal. Machinery is depreciated at 20% straight line method and a 5% residual value. Vehicles are depreciated at 25% diminishing balance, but there's no residual value. On the 28th of February 20X8, Nancy sells the van TA54 VLC, receiving £5,000 as a bank transfer. This van was purchased on the 11th of March 20X6 for £27,000. On the 1st of March 20X8, Nancy receives an invoice for a new machine, an extract of which is shown below. And here we can see we've got some costs for the machine. We're also then told that James, who works for Nancy, he's paid £25 per hour, and it takes him 15 hours to install and set up the machine. Now you can view all of this by clicking the references button to save you scrolling up and down in your exam. And then we've got two parts to this question. We need to enter the acquisition and the disposal into the non-current asset register and then do the depreciation entries as well. Now it's important that we need to show our answers to 2 decimal places, use this format for any dates, making sure we show the years using the X number format. And if we have any answers of 0, then we need to enter them as 0.00. And it's important you follow that so that you pick up the marks. So let's look at the acquisition first then of the machine. So we're given invoice extract here, and we've got a machine cost of 12,000, which we're going to capitalise. Now, we also include the delivery because we need to make sure that we capitalise all the costs that are related to the purchase of the machine and getting it to its location and available to use. So we wouldn't be able to do that without the delivery. We're also told there's a maintenance contract, but we cannot put that as part of our capitalised cost because it's a contract that will, a maintenance contract, so it's part of repairs and servicing, so it will go on our profit or loss, not on our financial position. So far we've got these two, 12,100, so we've got 12,100 so far, but we can't stop there because currently the machine has only been delivered and we're told that it's £25 per hour for James to install and set it up, and it takes 15 hours. So £25 by 15 hours is £375, and that we can add on to our cost to get a total cost for the machine of 12,475, which will be recognised in the non-current asset register. So 12,475 to 2 decimal places. For the vehicles then, so we need to dispose of the vehicle. Now let's remind ourselves is that we're told that there's no depreciation in the year of disposal. So let's dispose of this vehicle. So there's going to be no depreciation charges. Now with the carrying amount, be careful with this carrying amount because some students do go forward and just put in a figure there, but the carrying amount has to be 0 because if we're disposing of the asset, it means it doesn't exist. So therefore it's going to come off of our asset register. Our disposal proceeds and then disposal date. We've got our date here, 28th of February 20X8, and 5,000 was the proceeds. So 5,000 for the proceeds and 28th of February. So remember our format here that we need to put it in. So 28th of February X8. And now we can finish this off by doing the depreciation charges. So let's remember the depreciation charge for machinery is 20% on the straight line method and a 5% residual value. So because we're doing the straight line method, this first part of machinery here is going to have the same depreciation, 1,843, because it depreciates at the same amount each year. We then work out the carrying amount by taking what it was originally less that extra year of depreciation of 4,171. Now for our new machine, we've got to take into account this 5% residual value. So we've got a cost of 12,475, but we've got 5% residual value. So we're only going to apply depreciation on 95% of that value. So our depreciable amount will be 11,851.25, and that's the amount we're going to apply our 20% straight line depreciation on. So you'll multiply that by 20%, which gives you £2,370.25. And again, your carrying amount is then your cost, so your total cost here less the charges, to give 10,104.75. And then lastly down here, we've then got this depreciation for another vehicle. And remember that the vehicles was at 25% on a diminishing balance method. So now we need to take our carrying amount and multiply that by 20%. So with our diminishing balance method, we always take our carrying amount, the remaining balance of that non-current asset, and depreciate that amount, which will give you 3,675. Then you take the depreciation here off of your carrying amount to give the new carrying amount of £11,025. And remember, all of our figures are to 2 decimal places. We then need to complete the disposals account for the disposal of the vehicle and show the amount to be transferred to the statement of profit or loss. So be careful to make sure that you always do this bit. And again, we need to show to 2 decimal places. So what do we need to do to dispose of an asset? We need to remove the cost, and we need to remove the accumulated depreciation, and then take into account any proceeds before we can work out our transfer to the statement of profit or loss. So currently it's sitting as a debit in our vehicles at cost account. So we're going to credit vehicles at cost and we will debit our disposals account. Now the amount we were given in the question was 27,000 when she purchased the car. We then need to remove the accumulated depreciation. So that's currently sitting as a credit. So we would debit the vehicle's accumulated depreciation account and we will credit the disposals account. And our figure is 11,812.50, which you get from adding those two together there. So there was 2 years worth of depreciation on the vehicle before it was disposed of. So that's our total figure to remove from the accumulated depreciation. The next part then is the proceeds. So it was £5,000 that was a bank transfer. So it would have debited the bank. So we are going to then do a credit in the disposals account of 5,000. Remember 2 decimal places. So let's pop our decimal places in there as well. And in the exam, these will auto sum. So you will have the balances there and you will see that this balance will be higher. So this will be sitting at 27,000 at the moment. So then to make sure that the account balances, the disposal account balances, is going to be our transfer to the statement of profit or loss. So we're going to transfer to the statement of profit or loss. And that's going to be our balancing figure of £10,187.50p. And that means now you have completed your disposals account. Then the very last part of the question then is to complete the journal for the depreciation charge for the machinery for the year ending 31st of March X8. And again, we are going to 2 decimal places. So we're looking for machinery. So the depreciation charge for this year for machinery is going to be the existing machine and add together our new machine. So that depreciation we worked out on our new machine. You'll be able to select your accounts from the drop down. So it'll be machinery, accumulated depreciation, and a depreciation account. So some sort of depreciation expense account. So our amounts would be 4,213.25, which is those 2 amounts that we've just looked at, added together. And what we're going to do, debit or credit. So our expense, our account is going to be increased. So that will be our debit, and our accumulated depreciation will then be the credit. And that's the end of task 1.